Welcome to Infinite Returns Commercial Real Estate Investing. Brought to you by Infinity Commercial Capital. We help people find money. We are investors, lenders, and financing advisors. And this podcast is about real estate investing and helping you. Whether it's investing in residential rental properties or commercial properties, we talk about lending and all things real estate. From newbie to experienced, from funding to the strategy it takes to find success. Welcome your host, Karl Baker.
Hello, everybody. Welcome to our show, Infinite Returns, a show about commercial real estate investing. I'm Karl Baker, the host of the show, the CEO of Infinity Commercial Capital, a real estate investor, a licensed CPA for 30 years, and we're delighted that you're here today. At Infinity Commercial Capital, we help people find money, and we'll talk about our firm at the end of the show. I'm delighted today to introduce Derek Vickers, CEO of Victory Real Estate Group. They own and operate 38 mobile home parks, 1,926 units. Maybe that unit number is moving all the time, probably. So I'd just like to say hello, Derek. Introduce yourself. And we like to talk in our introduction. We like to talk about what our favorite cause is, being community minded. So introduce yourself. Talk about your firm, your history. We'll have some questions, obviously, but then also talk about your favorite cause.
Yeah, absolutely. And thanks for having me on the show. I'm super excited to be here. I love what you're doing. And I love when people in the commercial real estate space are out there, sharing knowledge with people, because I think there is, somewhat of a lack of it to a degree. And so I love what you guys are doing over there. So, but anyways, Victory Real Estate Group, we own and operate mobile home parks, typically mostly in the Southeast and predominantly in Florida. We typically buy turnaround properties that have been neglected by mom and pop owners for years. They've owned these parks for years, so they've got a ton of equity in them. They bought these things when they were like, in the 70s and 80s, right? Yeah. And they have a extremely low basis. These are the people that we love to buy from. So we go in and get these for under market value and then come in and breathe life back to them. Paving the roads, putting new lights up, getting out people that are doing bad things in the park. And we take these communities that are your quintessential trailer park and turn them into a nice community that's clean and safe, and where people, enjoy living, and that families can live and they can feel safe in that environment. And some of that actually goes to, we can get into that a little bit more, but, this is the only show that I've been asked about cause. And, a lot of people don't know this about me. And I get super excited about this, about some causes that I get really excited about. There's campaigns about, spreading the truth about drugs around the world, because in my days when I was partying in college, I had a lot of fun, and like bad fun, but like I know what these things can do to people, and you see people now ruining their lives over drug use or alcohol abuse. So I'm a huge proponent of getting the truth out there about those things. And another cause that I'm particularly excited about too is just really spreading awareness on, how, pharmaceutical companies just basically give all these drugs to kids. And it's pretty crazy how people don't understand, like, really the magnitude of this, and spreading awareness about that, and some organizations that I'm a part of. Really passionate about that, because as a kid, when I was in high school and stuff, I was put on, medication and things. And then it was never good for me. And I just really get passionate about that, because the kids are our future. And if you're drugging the kids, let's call it what it is, right? Then that's, damaging our future. So those are two things that I get really get me going, and really some causes that I support, and really is some of the backing why I do what I do.
That's fantastic. You really talked about two different things there: the illegal substance abuse, and then the concept of our society being over medicated. And it sounds like you could talk about that pretty extensively. So
Yes.
good. Good for you. Well, I am sure if anybody really wants to learn more about your resources or things, we'll talk at the end of the show about how to contact you, of course, about our subject matter. But I can hear it in your voice about how passionate you are about that, and maybe somebody will reach out to you and we'll ask for some direction there. So
Sure.
good for you. Any other comments about that?
No, no.
Yeah. All right. Well, so when we talked in the pre-show and reading your notes, you have an interesting background that has segued into your real estate firm. So let's talk about that. What was your background? What were you doing, say, 10 years ago, and how did that segue into what you're doing today?
Yeah, it's a great question, and it really is, the framework and the background of where I'm at today. So, 10
Mm,
years ago, I was selling insurance. It was 2014, so I was still struggling. I was selling insurance door to door. I moved to
mm,
Florida with $300 in my pocket and got the bright idea to want to go knock on doors and sell insurance commission door to door to business owners that were a lot smarter and more charismatic than me at the time. When I had other, inner demons I was fighting, I had to somehow portray confidence. So it was really difficult for me.
yeah,
It was really, really
yeah.
difficult.
It's a
I
hard
had a
job
tough.
anyway.
It's a hard job, even if you're like you have a confidence level of 10.
Right. Yes.
Yeah, and here I am, kid with just kind of getting out of college and just, doing partying all the time on the weekends. And so like I had to kind of start to
Mm,
fix myself. I had to start doing personal development because I got my teeth kicked in every single day, having to get out of the
mhm,
car and go knock on the door. And
mhm,
and there were some turning points that I had to where I just ran into some issues and I realized how bad I was doing. I went to I had to go out and cold call one day and I had to put gas in my Trailblazer, and I had like $5 on a credit card, $5 on a debit card. Then I had to call my grandmother for $50, and this was in, I think it was like maybe
mm.
2013. But then I realized I'm like, dude, you got to get it together. You got to get it together. Like you're 20 something, and you're
Right.
calling and asking your freaking grandmother for money. Like, what do you like? Come on, man.
Something has to change. Right.
Something's got to change. And so that's when I really dove
Mm,
into personal development, started really studying sales. I'm like, look, if I'm going to do this sales thing, like I can't go get a job. I don't want to work a 9 to 5 because I just, it wasn't me. I'm a
mhm,
maverick. I'm an
mhm,
entrepreneur. I don't like, I don't like to follow rules or do things that like other people do there that I guess the masses would do. So I'm like, look, I
mhm,
got to do this sales thing because this is my only shot. I knew I was going to make something of myself, so I was doing that. Ended up started doing well in that. Then I started to build a team. I had 10 salespeople, and then I built it up to over 100.
mm,
And so that really morphed from me selling on a day to day basis to me recruiting, training people how to go out and do it. And then when I had the
mm.
big team, I was I was in a leadership role. So I'm like managing commission salespeople that are fighting over deals. I called them first. And so like managing that relationship aspect. And so I really grew leadership skills there, which were awesome. I mean, it's, as many things that were wrong with that business, I did learn a lot of things that got me where I was today. And
Mm.
in that time, Carl, and you can jump in if you have any questions.
No, no, I'm enjoying listening. Sorry. Yeah.
Yeah.
Go ahead.
Um, if so I was looking at real estate. I started listening to I think Grant Cardone had a real estate show that he did every Monday back in the day.
Okay. Yeah.
Tons of value when it comes to real estate and underwriting, how to back of the napkin math a deal. So I learned how to do that
Right.
there.
I've heard
And
some of
that's where
that.
I learned that like people that had 50 million, 100 million, $1 billion of wealth, like they were actually investing in assets. I thought before that, I thought that they got paid every year that said $100 million. I thought they got a W-2 like I used to at the end of the year that said
Right.
$100 million. Um, before I started studying, I always thought someone that had $100 million of wealth got a W-2 at the end of the year that said $100 million. Like, literally, I
Right.
thought that because in
Yeah,
school, I didn't get taught that. I didn't get taught that growing up, like what was net
of
worth
course.
and what that actually meant and what the definition of that was. What was an asset? What was a liability? Like, how do you build wealth? I thought wealth was just money and having cash, and that is a part of it, but
Lots
it's
of it.
really,
Right.
wealth is really asset based, right? And that's what I
Hmm.
learned. And so when I started watching that real estate show, it made so much sense. Tenant pays rent. You you collect money. The leftover is cash flow after you pay. Like it's simple. It's a simple
And you get to
business.
keep it. Right.
Yeah,
Right.
it's a simple business, and I could understand that, and it made a lot of sense, and it was real. I always hated the stock market. It's ethereal. Like
Yes.
it's not there. But a real estate asset, I can go and touch it. I can go watch the grass get cut. I can see leases. I can see tenants. Like it's sitting there. So it made a lot of sense for
Right.
me.
Yep. And pay
Um,
the mortgage. Hmm.
Yeah, absolutely. And then, fast forward back up to when I was managing the sales team. Like, so when I worked, so I was a quasi entrepreneur, I like to call it. I was a
Hmm.
1099. I
Sure.
was 100% commission. I had the office expenses, all the staff, all of that. But I
A
didn't
true
own the book of
business.
business.
Hmm.
I didn't own the book of business. So the company owned the book of business. And so I couldn't sell it if I ever left. And our team was doing really, really well nationally. Like we were recognized nationally as one of the top teams. We were crushing it in so many categories.
Mm.
And then we would have people from corporate that had never knocked on a door, never made a sales call. They were trying to tell me that I needed to change my business when we were killing it. I'm like,
Right.
guys, look, I'm coachable. I don't have an ego. Like I'm fine. I'm fine to be coached, but like
Yep.
look at the scoreboard.
Something doesn't make sense there in what they're
Like
saying.
yeah, look at the scoreboard. Something doesn't make sense. And then I was like, man, I'm never going to be able to build this wealth if I can't even sell the book of business that I built, which was I
Yeah.
think generating, 6 to 8 million bucks in premium a year. It was a lot
Yeah.
of money, right?
Sure.
Um,
Yeah.
and then, here we go to March 2020. We all know what
Mm.
happened then. The world shut down.
The world stopped.
Florida was still kind of open, but no
Yeah.
one wanted to freaking buy insurance, especially the kind that I was selling. It wasn't like a complete necessity. It wasn't like,
Right.
it wasn't car insurance, it wasn't anything like that.
There was a lot of uncertainty, and people weren't thinking about forward thinking. They were trying to figure out if they were going to keep their job, have to move. Yeah. A lot of uncertainty 4 years ago.
Yeah. Yeah, for
Hmm.
sure. And I mean, and so I had some cash. I was like, all right, I got to get this real estate thing going. Carl, I was like,
Mm.
all right, now it's time. Like we get this, you get that thing when it's like, all right, I got to make a move now. I got to quit talking about it and thinking about it and underwriting. I got to
Mm.
figure out to do something. So my buddy was investing in mobile home parks and
Mm.
I knew about it. I'd talked to him about it. And I called him up and I'm like, dude, I got some money. I want to invest with you.
Mm.
And he essentially was like, dude, you don't have enough money to invest with me. And me, I'm like, all right, dude, screw you. I'm going to go do it myself
Just
then.
go do it yourself. Yeah.
I'm going to go do it myself then and figure it out. And so I actually, um, I found a list of all the mobile home parks in Florida because when I was looking, I'll rewind a little bit. When I was looking at multifamily deals, I mean, the price per door in the I-4 corridor in Florida, in Tampa, Orlando, I mean, it's
Yep.
massive, right? And I
Yes.
wanted scale. I didn't want to
Expensive
duplex. I
area.
didn't want
Right.
to do a single family home.
Right.
Um, I wanted a little bit I wanted to get some scale. So I was like, oh, mobile home parks, I can have a lower basis so I can get more units and still have the concept of multiple units without,
Right.
paying $200,000 a door.
Sure. Right. And all of this thinking, you'd clearly been thinking about this for a few years, watching podcasts, Grant Cardone's show, and just sort of thinking about all this and deciding to ramp up.
Yeah. Yeah. And
Hmm.
I started making cold calls to that list. And the interesting thing, Carl, is like I used to be like when I cold call in the insurance business, I was trying to
Hmm.
sell you something. Now I was
Hmm.
trying to like trying to buy
You'd
something
be
from
the
you. I was trying to
buyer,
give you
sure.
money. So it
Yeah.
was a different flow. It was a different flow.
Yeah.
And it was interesting because there just wasn't as much rejection, or maybe I was just freaking immune to it after 10 years. Like
Certainly all the cold calling helped, I'm sure.
absolutely. And so I was looking for deals, and started, and I really started cold calling, I think April, and I literally drove every single mobile home park, maybe not all
Mm,
of them, but a lot of them between Tampa, Orlando, Ocala, like that Central Florida
that area,
area.
sure. Yeah.
And I cannot even tell, and I underwrote deals, and even crappy deals.
Hmm.
And I cannot tell you the amount of knowledge that gave me on the market and understanding the market,
Mm,
understanding how to underwrite a deal, understanding if a deal is good or not, and then understanding the asset of actually getting boots on the ground and driving through parks. Like, I just cannot even tell you the knowledge it gave me. Like, I can underwrite a deal so fast now with so much
right.
certainty. I don't need financials. I
Uh-huh.
literally don't need anything to know if I want to buy the deal or not. Like, because I know the
There's
markets
a
that we're
lesson
looking
there
in that
somewhere
well, because I've
about
been there and
the
I know
actual.
most of the properties.
Right. Yeah. I was saying there's a lesson there in seeing the actual property and it not being theoretical, but the physical inspection has helped
Yeah.
you. Uh-huh.
Yeah, for sure. And just seeing like the intricacies of each deal, like, hey, this deal is more of a trailer park. This one is more of a mobile home park. This one is more of
Mm-hmm.
a manufactured housing community, like your 55 and older community. And you just
Mm-hmm.
start to understand the aspects of those a lot more, and really know what you're getting into. So I did that. That was a
Mm.
successful action. And then calling obviously was a successful action. And then my one buddy that told me I didn't have enough money to invest with him, he actually introduced me to a guy who actually lived relatively close to me, a few
Mm.
minutes. And so I started talking to him. He had been a capital guy in some deals before. And so I started talking to him about parks, and I started sending him deals. And I was like, hey, am I underwriting this correctly? Are my expenses correct and whatnot? And then he calls me one day out of the blue and is like, hey, man, I have a deal. My operating partner backed out. Do you want in? And I'm like,
Hmm.
okay, man, I'll call you back. And I get off the phone and I'm like, dude, call him back and say yes, because you're gonna say yes. Like,
Oh,
come on, man.
wow.
Why the lag time there?
This sudden hesitation.
Like, why the hesitation? I think people do that, and I've tried to eliminate this in myself. I've gotten from this much lag time. I think I'm down to this. I really want to get like not even I should have just
Uh-huh.
said yes.
Uh-huh.
Like, why wait? Why do we do that? And people do this all the time. They're like, "Oh, I'll get back to you." I mean, I do it too,
Yeah.
right? But if you're certain, and I was
It's a
so
delay
certain,
tactic. Yeah.
yeah, I was so certain that this was what I wanted to do. Yeah, okay, let's go. And so I
Mm-hmm.
got into that deal with no money, and that was a doozy of a deal. And we
Wow.
can talk more about that, or you can chime in and ask questions if you want.
Well, so yeah, so this was your first deal.
Yep.
And give a sense at whatever level you want to give a sense for how you got into real estate. What was the size of the property? What was the mix of owned versus rented mobile homes? How long had it been? Yeah, go ahead. And you said you got into it with no money, so talk about the deal a little bit. I think our listeners are going to be a mix of advanced people and new people. They're trying to figure out how to, what sort of cash they need to have. So maybe it's a lot, maybe it's a little, depends on the situation. So your first deal case study, I think, would be very helpful.
Yeah, yeah. And this deal was so there was 22 units on site. Only 10 of them were inhabited. The other 12 were in, disrepair in various forms. Some
Hmm.
were ones and some were 10. Some were terrible.
Wow.
Um, the park was full of criminals. It was full of sex offenders. Nobody was paying rent. This park it was your trailer park. It was your total
Ooh,
trailer park. Everyone
right.
listening, if you live in a town, think of that one trailer park where you drive by and you're like, ugh, this was probably worse than that.
Yes. It's where the news goes to interview when a tornado goes through. They go and interview people out of that trailer park. That's what
Correct.
stereotype. Yes.
Correct. And so this park, the health department in Florida actually used to take their new staff members as
Mm.
an example of what not to do. So
Wow.
this was a doozy. This was everything that most mobile home park people that you hear online tell you not to buy. It was a mix of public and private utilities. It was all park owned homes, so we owned all the units,
Mm.
um, and it was just a disaster. But anyways, we bought it for 425,000. I had two capital partners who put up the capital for that. We had 75 grand in capex that we brought to the table. And so basically what we did is we cleared out all the criminals and the people that weren't paying rent and the people that were, dealing drugs in the community, having prostitutes over at night. I'm not lying about this stuff. I mean,
I
this is
I believe
this
you.
is
Yeah.
the this is what was going on there. And this is the
Wow.
this is the G version. Carl,
Hmm.
this is the G version. Okay.
Right. I believe it.
um
Sadly, I can envision this. Yes.
Yeah, and so there were some people that actually, that we kept and stayed, but then we actually ended up filling up the rest of the vacant homes, converted all of the park owned units to tenant owned and converted them at market lot rent. And
Okay.
so the park, were you going to ask something?
No, go ahead. I'm going to in
Yeah.
a second. Go ahead. Finish your thought.
Yeah, so when we refinanced this park, it was in August of 21, so almost a little less than a year after we had bought it, because we paid cash for the deal. It wasn't a refinance; it was actually a first financing,
Yep. Uh-huh.
but because the bank wouldn't touch that deal in the beginning. Um,
Cash out equity. Yeah.
yeah,
So by that point, you had you were the equity operator. It sounds like they gave you a piece of the ownership if you agreed to manage and turn this place around. The other two investors brought the cash. So that there's a case study there in how
yeah,
to get started in real estate. That's fascinating. Um,
yeah,
I'm assuming now you have you turned it around. It's at some point it becomes a quality property in which you can obtain financing, probably a return on investment, some version of a return on investment or and a return of investment to your capital partners. Um, Probably that's the kickstart to additional capital and continuing down the road to scale up your portfolio.
yeah, yeah. And this is how the scaling happened. And so
Yeah,
the
let's talk about
we
that.
had we had this business, and so I wanted to mention one thing on what you mentioned about the sweat equity. So,
Hmm.
guys, if you're trying to get into a deal, I'll tell this to your audience. It's like
Hmm.
sweat equity has value. Like, don't just think like, oh, I'm just going to go be the operating partner. It's freaking hard work. And there's
True.
a lot of
Yeah.
people out there with money that don't want to go knock on a door, that don't. I mean, I didn't particularly want to do it either, but I wanted to get
Right.
into a deal. So I was like,
Right.
dude, I'll roll my sleeves up. I don't care. I've been yelled at on the phone for making cold calls for years. Like, whatever. You're not going to do anything to me.
You're
Right.
used to. Well, people talk about the concept of you either have time or money. Maybe you have both, but you either have time or money. You found the money partners. You had the time and the willingness, and took advantage of it.
Yeah, yeah.
Yeah.
And so we closed on that deal in September of 2020. We figured out that business thesis worked, that we could convert
Mm.
the units we owned into the units the tenants owned.
Mm-hmm.
And we figured out that worked, right? Pretty quickly. And so
Mm-hmm.
I kept finding deals. So in February, at the beginning of February 21, we closed on four more deals,
Mm.
similar deals. And
Okay.
then come May, we closed two more. And then come June, we closed three. Yeah, it was three more. And so we always closed these in clusters because we kept finding them. And the interesting thing is because it was a product of the market and low interest rates and some of that too. But just think about it.
Yes.
If All right, so think about if your people are investors on here, you talk to sellers and they're like, I want this price. And you're like, man, that's freaking stupid. Like, no one's going to
Mm-hmm.
pay that. You're not a seller. Well,
Mm-hmm.
we found out that actually we could pay more because of the thesis that we proved to be true. We could pay that unreal price to sellers, like, and without even like, I'm like, man, this is a dumb deal. And so we could offer you, Karl, your pie in the sky. I'm going to the Cayman's price. And we
Uh-huh.
were excited about it. And of course, you're like, hell yeah, I'll sign a contract.
Probably because it was a magical number to them based on the current value, but you were going to infuse so much extra value into it, you could afford to pay the premium, kind of no questions asked, knowing that it was going to be a lot higher value once you improve the property.
Yeah. Yeah,
Is
and I
that
mean,
right?
if you look at yeah, that's exactly right. And so, like, if you look at the, you get real estate investors think about the 1% rule. So we were buying these
Mm-hmm.
properties at 40, 45, and 50,000 a unit and able to get 750, $800 in lot rent.
Mm-hmm.
So at
Mm-hmm.
a five and a quarter cap, what this stuff was reappraising for, just freaking do the math.
Right, right.
You know?
And it'll provide the capital to continue replicating the venture.
Yeah. 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 Um, Go ahead.
No, cool. So that gives us a sense for how you begin to scale. You just talked about, I didn't write it all down, but you just talked about in between September of 20 and August of 21 when you did your first cash out refinancing, financing, first time financing, but still we call it a refinancing. In between there, you bought 4 or 5 units. And so I'm assuming you, somewhere along the way, you realized this is really working. You have your money partners, you have figured out your systems, you're building systems. This is really going to work, and you're scaling. And you're turning this into a permanent business. I'm assuming by now you've also um, stopped being an insurance salesman and you've said goodbye
Yes.
to all those people?
Yeah, that was around the time that, we did that first,
The first one.
refinance. So
Okay.
that
A year
was
into it.
yeah, so we were actually so I was actually I'd built the business up to 1,000 units while I was still working that insurance business 9 to 5. So we were making so
Okay.
we did the I'll start with the refinance. We bought that property for 425. It reappraised for 1,750,000.
Wow.
Huge value jump. So the
Sure.
the cash I got back out of that was like almost as much as I was making in the insurance business. I didn't have any staff, didn't have any employees, and it wasn't taxed.
Right. Right. Of course.
So I was
Right.
like, "Hey,
It's a
let's
beautiful
let's
thing.
roll that in." And then at that same time, we were making an acquisition that actually was going to take us from 500 lots to 1,000 lots in one shot.
Right.
It was a portfolio acquisition with one large park, and so
Mm.
at that point, I knew that it was time to retire from the insurance business. Like, we were doing
Mhm.
so well, it was a freaking shock to everybody. I went into, like,
Right.
the hire person corporate in their office one day, and I was like, "Hey, I'm retiring." They're like, "What? Are you
How
frick
could you
like,
give
you're
this up?
why? You're freaking, like, crushing it and everything. Like, what are you doing?" And I'm like, "Dude,
Right.
I'm crushing it here, but really crushing it over here."
Right.
Right? And
For
it
me to
just wouldn't
know
have
and
been
you to find
feasible.
out.
What's that?
I just said, for me to know and you to find out, I'm not going to tell you how well I'm doing.
Yeah, yeah, and it just wouldn't have been it just wouldn't have been feasible. I wouldn't have been able to lead my team how I needed to lead the team, and so it was just time for me to go. And plus, I was like, I was done. I worked. The cash I got out from that refi. Yes,
Hmm.
it took a lot of work, but like to make
Hmm.
that much money in the insurance business, like, dude, I was freaking working my butt off. You
Sure.
know,
Yeah.
like
You got $1.3 million in cash out over and above your purchase price. Um,
correct.
Over and above your purchase price. So yeah, that just gives you a sense for what you did. So you can you can get a sense for how you scaled, doing that over and over again, infusing equity value into the property. Lenders are going to they're going to base the valuation on the net cash flows, and they're seeing that. I'm sure lenders are now starting to have a relationship with you, and they're seeing the story being built. At some point, you've got to start building. It's more than just you and your capital partner. So you're seeing this is working, and you have to build a team. I think you mentioned that right after you got your first financing, the cash out. You didn't have a team, but you've got all this money. You quit your job, and but you've got to start building a team. Talk about how you did that, and then segue that into bring it forward to today, and what all the lessons you've learned and what your team looks like now.
Yeah, and so building that team was pretty rocky because we bought a bunch of turnaround properties, and we had to hire people fast, didn't do proper vetting, and so we hired some people that didn't do the right things, and we had to obviously clean house at one point and rehire new
Mm.
people.
Hmm.
And so we went from a sort of like an on-site manager thing to having regional property managers that we paid, well to get high talent, and they were actually able to handle more than your, person that lives in lot 15 who's going to do your stuff for you. The important management stuff. Because the
Hmm.
management business, let's be honest, it's the most work and it's the least profitable part of real estate. Like your
Yes.
management fee it's just not profitable. I mean, I don't know
Right.
how else to put it. Unless you get to like super scale, it may be a bit profitable for you. But that's really one of the lessons that I learned is really vetting your people, having a
Hmm.
strict hiring process. Don't make rash decisions, and like you really need to make sure that you hire the right people and pay more for good people. We were trying to cheap it in the beginning, and it bit us in the butt.
Well, we've talked about it on this show. Anybody that talks about scaling up a business, hiring, it always comes up the importance of hiring right, not just warm bodies, but hiring right, paying more for good talent. We talked about that on a recent show. We spent a couple minutes on that topic alone. So yeah, I had already written down as a lesson learned. So yeah, keep going.
Yeah, yeah, and I think too, like you know the So when I was managing that first property myself, and like when
Hmm.
we made those 4 acquisitions in
Hmm.
February that I talked about, so I was still
Hmm.
managing one of those, and then 3 of them were probably an hour and a half away, so I had to bring on someone else to manage those, but I was still pretty involved. One thing I didn't do because I was figuring out all the procedures and like the steps to do things, but I wasn't writing them up into like
Hmm.
an SOP, like, "Hey, here's how you do this. Here's how you do this. Here's how you do this. This
Systems.
is how you do this,"
Hmm.
right? And
Hmm.
so when we brought new people on, I could have had file and just said, "Here you go, like study this stuff. This is how you do this."
This is how
But
we
I
do
didn't do any
this.
of that. I didn't do any of that. And so we were just running so fast. Um, I didn't get to do that. And like if you're buying one property and you're like, "Shit, I can bootstrap it on this property." Well, yes, you can, but you still want to get your systems and processes and procedures down because
Right.
you're going to buy another property, and you're going to buy another property, and you're going to buy another property, and before you know it, to put those in when you get 1,000 units versus when you had
Hmm.
20, it's a bigger ship to steer, and it's not as easy to do so.
It's important for scaling because you've got, without that, you're winging it on every decision. It's impossible to leverage to your team because you're having to spend hours teaching people how we do things. And there's some of that anyway, even with systems in place and policies in place. So, and that's important. But when you're winging it, yeah, I can imagine that's pretty hard. So at some point, the light bulb went on, and you went, dude, somebody has to figure this out and help me get some systems in place, I assume.
Yeah, yeah, and we had a team come in, and all the partners sort of work together to get that
Hmm.
in place, and it took some time, but we had it. we got it enough in place now to where we've been able to sort of exit ourselves out of that business. So I'm
Mm,
literally not involved in the day-to-day operations of that anymore. And I've got, another partner I'm working with now that we're looking at building a different, like a new portfolio with higher quality assets,
mm-hmm,
and with some value add too. But um, lessons learned, and it's just moving forward. I There's so many things that I learned that I have been doing differently now,
mm.
and unfortunately, I had to get myself kicked in the face in order to learn the correct lessons.
Well, and we've talked about a lot of those things in so many ways. The importance of wealth building, the importance of deal analysis. You said you figured out how to do that so quickly now, but the reality is there's a skill set to that, a combination of science and art and all of that. One of the other things, and let's ask this question before we wrap up. I mean, we could keep going, and I know there's a ton more. I hate to do a disservice to your important and incredibly interesting story, but we do have to end relatively soon. One of the things that you said in there is that I think will help close this loop. You've ramped up this business. At some point, you've realized this is a real business. You've put in systems in place. It's a big business, couple thousand units. You're, I'm sure, still growing, but you've also said in your notes that you've learned how to balance this with your family because it could become all consuming. So talk about that for a couple minutes, and we'll end it with that.
Yeah, and I think too, like a lot of it, you have to put your ego aside, your personal
Mm,
ego, because it's always like, oh, I can do this better than the next person.
yes.
Like, and I think that's the salesperson in me that I had to let go. But you have to have that, because I'm
Mm,
of the belief if one area of your life is slacking, then it will drag down the other areas. And so if you've got, issues in the business, it'll hurt your home life. If you've got issues there, it pulls that down as well. And so, like, if you're doing something, like, this is my rule. Like, if I'm doing something during the day, I'm like, hey, I could pay someone 25 bucks an hour to do this. Boom, I write it up and boom, it's out. You know,
mm-hmm,
I write that up and it is out.
mm-hmm.
And yes, I could probably do it better, but entrepreneurs, if you're listening to this, do the calculation. Is your time worth $25 an hour?
Right,
Do
right.
the calculation. I know it's more than that, you know.
Of course.
So your calculation is a couple $1,000 an hour, why in the hell are you doing
Hmm.
some of these things that's keeping you from your family life? It's keeping you from keeping yourself healthy and going to the gym. Like,
Right.
why it's keeping you from whatever. If you work on yourself spiritually, it's keeping you from doing that stuff because
Hmm.
you will not pay someone $25 to do, 25 bucks an hour to do whatever you want them to do. Right. And that's how you really, really balance your life, because your time is so valuable as an entrepreneur, and your value you provide is huge. Right. Especially
Right.
when you've had tons of experiences and stuff. And so, like, and I've struggled with this too, is getting out of the mentality of like, oh my God, I have to, like, in sales, I was calling 8 hours a day. That was a measure of productivity for me. But maybe
Yeah.
now, me spending an hour a week, a couple hours a week in that business to operate it, that's of how much is that worth? Like, that's huge, right?
Right.
Your insight, your all of that is huge, right? So it's really a shift in mindset.
Yeah, there's lessons there about letting go of perfectionism. What's the phrase? Don't let perfect get in the way of good, and leverage. Letting other people help you, you're going to get more done.
Yep.
And just being a real business person and
Right.
working in the business or working on the business, not in the business.
Yeah.
Lots of lessons there. Well, Wow, that's fantastic. So many jam-packed lessons in this episode, and really appreciate it, Derek. Why don't you give a final piece of advice and then segue that with where to reach you? I think you have some giveaways to talk about, how to get in touch with your firm, and we'll go from there.
Yeah, I mean, there's really not one piece of advice I could give that's like, hey, this is the one thing that like
Hmm.
really propelled me. But I've always like truly believed in like, hey, if you work on yourself, like, spiritually and professionally and get better and gain more skills, like
Hmm.
if you fix that stuff, it will show itself out here. Like your life will get better if you're making yourself better. And whatever that is for you, like I don't know whatever that is spiritually for you or whatever that is,
Right.
like from a knowledge perspective, like where are you learning and getting knowledge? But that's important because things will get better as you do that. And so, like, work on yourself, man. I mean, I know it's like cliche, but dude, like, I've never bought a program. I've never read a book that was terrible that I didn't get something out of. Actually, I have read bad books that I've still even got something out of
Yeah, they are out there. Yeah, but yeah.
for sure.
Well, I think so many people, the catalyst to growth is getting over the fear, getting over the inaction, and then continuing that and using the hockey term, keeping your feet moving. I hear that phrase a lot, or I use that phrase. So many lessons there in that initial getting past the inertia and getting moving has kickstarted, and now you're able to tell a story of the success, and it's more than just about you. This will hopefully help other people. So lots of lessons there about hiring right, scaling, getting into real estate. So fantastic. Well, how do we find you?
Yeah, so I'm easy to find. So every social media platform, I'm Derek Vickers 885, Instagram, TikTok, all of them, right?
Mm-hmm.
YouTube, you can find me. You can
Okay.
the MHP Show podcast. You can find this on iTunes and Spotify. It's a podcast about all things mobile home parks. It's either me running
Fantastic.
my mouth or other operators in the industry I'm interviewing. So it's a great show. Spotify or iTunes and YouTube, you can check that out. You can
Okay.
also go to victoryrealestategroup.com. And then also, I think we're going to put it in the link. We have our quick deal calculator. Works for all
Okay.
commercial real estate, not just mobile home parks. And we usually, I think we charge $7 for that, but I'll get the coupon code so all your listeners can get that for free.
Okay.
Um,
We'll put that in
it's
the
literally
notes.
something that helped me underwrite deals at the snap of a finger. And we've got all kinds of stuff, and um, we can throw some of that in the show notes too.
Okay. Yeah. Fantastic. We'll follow up with that. That's great. A huge value offer. Everybody's always talking about how to analyze a deal and what those little number cruncher tools look like. So that's audience will be great. We'll very much appreciate that. Well, thank you,
Yeah.
Derek. Fantastic show. I can't wait to get this out into the show. We'll end with that. I'm going to end with just a little plug about Infinity Commercial Capital. We help people find money. We're lenders, financing advisors, representing the borrower. That's a huge value proposition that we find. Instead of going out and seeing what sticks with lenders, we're actually representing our borrowers, helping them with financing positioning, and then approaching lenders the right way so that there's a higher degree of success. We're helping people with ground up construction, bridge loans, rehab financings, permanent financings. One of our other value propositions is the 30-year fixed rate commercial loan. So that's a tool that we like to introduce to our clients. A lot of people don't even know that level of financing is available, the 30-year fixed rate commercial loan. So that's fantastic. You can find more about us at infinitycomcapital.com, and you can call us at 314-403-7745. Email us at an info at infinitycomcapital.com. As Derek said, we're all over social media trying to add value, add education on all the platforms, and we really appreciate you checking us out there. If you like this show, don't forget to subscribe to the show and like the show so that you can see future content. If you have comments, leave a comment, questions. I'm sure if there are questions for Derek, we'll get those questions to him. And with that, I'm going to say goodbye until the next show. Thank you very much for listening and have a great day. Bye-bye.
Questions, comments, want to be a guest? You can reach Karl at kbaker@infinitycomcapital.com. You can find all episodes of Infinite Returns Commercial Real Estate Investing on all major podcast platforms and YouTube. Thank you for tuning in. And until next time, happy investing.